Welcome to the Explainer. We're skipping the usual preamble today and diving straight into one of the most fascinating mysteries in modern finance. We're looking at a story that literally bridges ancient safe haven assets with cutting-edge blockchain technology. Today, we're demystifying TetherGold.
Okay, let's dive into this, because honestly, it sounds like a plot straight out of a James Bond film, but it's absolute cinematic reality. Deep in the Swiss Alps, inside a Cold War-era nuclear bunker, guarded by multiple layers of thick steel doors, a crypto giant is hoarding massive amounts of physical gold. Every single week, heavily guarded transports haul tons of bullion right into this high-security vault.
To wrap your head around the sheer scale of what we're looking at, just consider this number, $24 billion. Yeah, you heard that right. Tether currently holds roughly 140 tons of physical gold. That makes this specific Swiss bunker home to one of the largest known hoards of gold anywhere in the world, outside of actual nation-states and central banks.
Section 1. Inside the Swiss gold bunker. Let's unpack the why behind this massive physical accumulation.
The answer lies in a massive global macroeconomic shift. As Tether CEO Paulo Arduino noted, they're essentially acting like a gold central bank. And it's driven by a global flight to hard assets, plus massive buying by BRICS nations trying to de-dollarize. Tether has been quietly buying 1 to 2 tons of gold every single week directly from Swiss refiners. They're positioning themselves for a world that's desperately seeking a safe haven from inflation and geopolitical turmoil.
Now, what's really interesting here is how this massive physical hoarding directly serves a digital purpose. Just look at the first quarter of 2026 alone. Their reserves surged 36%. They now hold over 700,000 fine troy ounces of gold. And here's the kicker. Every single ounce sits in that vault to provide a strict one-to-one backing for their digital token, known by the ticker symbol XAUt. This pushes its market value to a staggering $3.3 billion.
Section 2. What is TetherGold? We are pivoting now from the physical bunker to the digital asset. So, TetherGold, or XAUt, is a digital token existing on major blockchains like Ethereum and Tron. Here's the absolute magic of it. One token equals exactly 1 fine troy ounce of physical London good delivery gold. But because it's digital, you don't actually have to buy a whole ounce. It allows for fractional ownership all the way down to 0.000001 ounces. This gives you direct exposure to physical gold without the incredible friction of transporting, insuring, and vaulting it yourself.
The mechanics are incredibly straightforward. Step 1, you buy the XAUt token on an exchange. Step 2, Tether allocates that exact amount of physical gold in their Swiss vault. Step 3, your direct ownership is transparently recorded on the blockchain. That means you can actually look up the serial number of the very gold bar your tokens are linked to. And step 4, if you really want to, you can redeem your tokens for the actual physical metal.
However, before you go booking a flight to Switzerland to pick up your gold, keep this number in mind, 430. To actually redeem your tokens for a physical gold bar, you need a minimum of 430 XAUt. At today's prices, that's well over $2 million worth of tokens. Plus, you'll be hit with a 0.25% fee, not to mention delivery costs. So for most of us, keeping it digital is definitely the way to go.
Section 3. Digital versus physical gold. Let's look at why an investor might choose a token over traditional methods. And this brilliantly illustrates the differences. Look directly at the middle row here, storage costs. With physical gold, vaulting and insurance are incredibly expensive. With gold ETFs, you're paying a recurring management fee of around 0.40% every single year. But with XAUt, there are 0 recurring storage fees. Add in the fact that it trades 24/7 on crypto markets compared to the restricted hours of dealers and stock markets, and you can really see how XAUt bridges the gap between physical reality and crypto portability.
Section 4. The tokenized gold wars. Because, Tether is definitely not the only player in this game. The primary battle going on right now is between TetherGold and its main rival PaxGold, or PAXG. It's essentially a battle of use cases. XAUt is the crypto-native choice. It's offshore, uses those Swiss vaults, and boasts massive liquidity for active traders. PAXG, on the other hand, is issued right out of New York, it's heavily regulated by the NYDFS, stores its gold in London, and focuses intensely on compliance-minded Wall Street institutional investors.
Together, these two titans control about 90% of the entire tokenized gold market. But as you can see,
TetherGold is currently leading the pack at around $3.3 billion in market cap, compared to PaxG's roughly $2.5 billion. XAUt also totally dominates in daily trading volume, making it the preferred vehicle for traders who are looking to move in and out of positions quickly.
Section 5. The gold to Bitcoin rotation. Now this is where things get really actionable for traders.
Gold has been on a historic tear, recently hitting an all-time high of $5,589 an ounce. Why? Well, because institutional money is flooding into gold as a first-response safe haven to geopolitical and inflation uncertainty. Central banks have been aggressively buying over 1,000 tons a year. They're completely ignoring the traditional rules of real interest rates, which signals a major macro regime change that we all need to be paying attention to.
Let's move to the timeline and see how this builds a predictable rhythm in the markets. We're currently in what analysts call Cycle 3 of the macro rotation. Back in 2019 and again in 2023, we saw the exact same pattern play out. First, gold pumps on macro fear as institutions seek safety. Then, once gold exhausts its rally and consolidates, that massive pool of capital rotates out of gold and directly into Bitcoin for a massive high-risk rally.
When researching this, we uncovered a really fascinating institutional data secret. A cross-correlation analysis of weekly returns shows that Bitcoin's price peaks roughly 12 weeks after a major gold rally. Gold leads, and Bitcoin follows about 3 months later. This is exactly why crypto traders are heavily trading XAUt right now. It allows them to ride the gold wave natively on-chain and then seamlessly rotate those profits straight into Bitcoin the absolute second the cycle shifts.
Section 6. Is XAUt for you? Let's bring these complex concepts back down to earth and directly address how this fits into your potential portfolio.
So the crucial point is that while XAUt is a powerful tool, it's definitely not without risk. You're taking on counterparty risk. You have to fully trust Tether's disclosures and their custody in that Swiss bunker. There are also smart contract vulnerabilities inherent to literally any blockchain token, exchange spreads that can widen drastically during chaotic market moments, and, of course, the potential for capital gains taxes depending on exactly where you live.
Which leaves us with this final thought. As central banks hoard physical metal and crypto natives trade it 24/7 on the blockchain, we are watching the birth of a borderless, programmable safe haven. So, what do you think? Will tokenized gold like XAUt eventually challenge the dominance of fiat currencies like the dollar? Or is it just a glittering trend riding the wave of geopolitical fear? Thank you for joining me on this explainer.